Hey everyone, welcome back to the Capital Mindset Show. Today we're going to be actually talking about a subscriber request. I don't really know why this one was subscribed, but I'll give it a look, and it's going to be a short-ish video. I already kind of took a look myself to kind of see if I could find anything that was interesting regarding this company. But the company is called Arrival. Okay, so Arrival is a small EV maker. It's actually pre-revenue. Okay, so right off the bat, I'm going to state that we're probably not going to go into the model here. We're just going to go over some preliminary analysis, taking a look at the business, what are my thoughts on it, and we'll actually start with the price performance. Price performance has been abysmal, to say the least. It's down, about 93%. We just actually made a video and published it on, revisiting that previous concepts regarding the liquidity crunch. This is another company that fell quote unquote victim to this. This is a company actually in Europe. I believe it's based out of London or the UK. And so the accounting metrics that they use is IFRS, just so everyone understands. And so I'll actually be discussing a little bit about their balance sheet and talking about how the business is kind of operating things. So we're not going to look at the income statement, because that will be useless to you guys because they're pre-revenue. So already on that front, you can kind of get the feel for that. Taking a look at kind of what the YouTube community is kind of saying, you can kind of see that there's all these stocks talking about Arrival. So Arrival, in various aspects, various lights. So I won't really get into it. You guys probably get an idea. You probably, if you're clicking on this video, they seem to get decent views, those types of videos. I don't know why, but yeah. And the benefit, or the supposed benefit, of Arrival is replacing Uber drivers. So we're actually going to look at a analysis that I did, or just a quick preliminary analysis, just so everyone remembers that. And it's actually showcasing the scenarios in which an Uber driver might be using this. Okay, so we took the average Uber driver, miles per year, 50,000, average take 19.30 an hour. At the end of the day, this analysis pretty much tells me that it's not really that much worth it to be an Uber driver, depending on the area maybe, but it's really difficult to actually make it work. Average hours, 40 hours, because we're only going to be taking a look and comparing the Uber drivers that are probably going to be replacing their car or their current car with an Arrival vehicle. But taking a look at some alternatives, actually the most popular one is actually the Prius, or one of the most popular ones is the Prius, and actually Arrival claims and targets the Prius. Okay, but taking a look at the Prius has a lower cost. The Arrival car will cost around $35,000. The Arrival van will cost about $50,000, and there are actually some upward revisions. We'll talk towards the end about the micro factories, but we'll get to that. So taking a look at the cost structure, this is kind of what you have to look forward to. It still is more cost advantageous to have a Prius and a Nissan Leaf, and that's with these interest rates. If I assume, higher interest rates, it obviously gets worse. For some of them, we also have to replace batteries at some point, and so we are also assuming repairs are not included in other aspects of the car, just the batteries. So there probably is more that has to go into it, and a lot of costs associated with that. Okay, so, and we're assuming they take them fairly good care of the car. The cost per mile, I am assuming that Arrival is pretty efficient. Now, the one thing that I'll say is that the range is unknown. You actually can't even find the range. So if I actually find right here the website and showcase this to you guys, let me actually show that now. So if I show you guys this website here, there's a video, you can watch it. It's 2 minutes and 20 seconds, but it's basically a massive advertisement for their car, how amazing they are, blah, blah, blah. And you actually kind of go through the website. You can command search the word range. You won't find it. You won't find it for this car. So you have no idea. It's entirely speculation. So I assume that they're going to get 200. Their van gets around 100 from what some analysts, or not analysts, but car reviewers are saying. So a van range at 100, I don't think that's a lot, to be honest. It seems like the load that it can take is actually quite comparable to its competitors, supposedly. But it's a lot of lack of execution by the management team thus far. And currently, the investor base is kind of upset with Arrival, from what I can tell, because they're just not executing. And I can understand that. I would be probably pretty upset if my investment wasn't executing, or my company wasn't executing. But I think the investor base of this company are fairly new to the market. It screams to me newer investor for me personally. Now, the risks are vast, and incredible. And I skimmed through some of the content creators and what they were saying about this company, and I guess that kind of relates to why it was requested in the first place, because I mean, I don't really know. You guys can probably make your own guesses, but yeah, it's incredibly speculative to the point where it's essentially just gambling. That's kind of my thoughts there. If we actually, I mean, I'm debating on going to the balance sheet. I'll go into the balance sheet. All right, so yeah, just taking you into the balance sheet, you can kind of see that there's a lot of goodwill on the balance sheet, which is a bit of a concern. I don't like to see that much goodwill. This is IFRS, by the way, it's not GAAP. And so you do have to calculate some things differently, such as operating cash flows. I don't really care because it's negative anyway. If you actually take a look at the income, so consolidated statement of profit or loss, you can see that there's no revenue. It's just operations. So administration expenses all the way down. And we'll actually take a look, or not take a look. We'll discuss a little bit about the micro factories at the end of this video. This video, again, I'm trying to keep it under 10 minutes because there's not really much else to talk about. But yeah, property, plant, equipment, about 240 million, intangibles, goodwill. This is the part that's, again, concerning because you don't know the exact value of that or the nature of those assets really located under there that they derive a goodwill value for. Goodwill tends to be the highest propensity for fraud. Not saying that they are fraud, but highest propensity. The fact that it makes up about more than half of current assets is a concern, and it's still a decent point of total current assets. All right, so non-current assets, it's a decent amount, but total assets in general, that is still nothing to sneeze at. But it's not like insane. Okay, I'll say that it's not insane. Inventory is fine. Everything else is fine. Cash and cash equivalents. So they have a decent amount of cash. This actually comes from a lot of dilution that's been occurring. So they have been diluting shareholders quite a bit. They've been raising, instead of raising debt, because you can see here loans and borrowings. So debt has risen, and then they're not selling anything. Okay, so the question is, how are they getting that money? Well, they're getting that money from somewhere, and that's share dilution. Okay, so I don't even have to look at the shares to tell you that that's what's happening, because I'm looking at their borrowings and I'm looking at their cash going up. It's not matching, and they're not making any money right now, so they're diluting you. So again, this was if someone invested in this, if you know someone who's invested in this, this is a good time to maybe sit them down and have a conversation with them. Say like, what are you doing? Why would you do this? And then, I don't know, go Socratic method on them and stuff. But yeah, that's just a little bit of the concerns I have. Okay, so going into the micro factories, for those of you who, that tidbit, it's pretty simple. If we actually think of a micro factory, take the Tesla factory and just, scale it down to a small portion of itself. And the concept is kind of go the opposite of the gigafactory. Gigafactories go big or go home. Microfactory is small in a lot of places, and the capacity is about, I think it's like 10,000 cars supposedly, and about 1,000 buses, or it might be 10,000 vans, but it's something like that. And the gigafactory obviously is capable of producing a massive amount of cars in comparison to that. So whether or not which one's going to win, I would say that the microfactory the unit economics doesn't appear to be as nice or as well, and there's going to be a lot of extra costs associated with that. You can kind of see this with management they keep revising the cost, the OPEX and the CAPEX necessary to actually run those microfactories. They keep readjusting it. And so that leaves me a little bit of concern that management's, probably doesn't even understand the nature of just how expensive it's going to be. Just like my thoughts, it seems like the logistic nightmare, but whatever. They're going to try it. And if they succeed, I mean, that's a good thing. They'll be, I guess, one of the first ones to really achieve a very, I guess, efficient microfactory system if they can achieve that. And maybe that investment could then pan out. But this is more likely a company that will either face bankruptcy or, just go nowhere or just underperform the market. And, you could be extinguished quite a bit. Or, again, it could pan out, I guess, in some way. But you're really gambling here, and you're gambling the whole way through. If we actually look at the actual stock price again, you can kind of get an appreciation for just how much gambling this really is all the way through. This scenario was, if you were buying around here, around here, anywhere around here, you are absolutely horrendously gambling. But like you're gambling to the point where like the odds are definitely not in your favor, to say the least. But yeah, I don't know what else. Don't know what else to say about Arrival. Again, the claim is, this is very important actually. So this is generally with all these companies, like they say, I have a partnership with X company. So in this instance, they have a partnership with Uber. Well, it's not really a specialty. Having a partnership with a company like Uber isn't really something special, especially as a car company. Uber has partnerships all over the world with many different car companies, and so you're not really that special. Toyota has a partnership with Uber since about 2018 to make electric vehicles for their services. And so, yeah, I know that companies love to use this partnership strategy to and it's always to trick retail investors. I actually had seen, and when I was looking through this company, because I wanted to find any information, who's talking about it, I saw that, they're doing the classic interviews on Benzinga, and that's advertisement to the retail crowd investor. So if you invested in it and you, after watching that video, they succeeded in their job, they got interest, and that's what the CEO is doing. He's going to these interviews to try to get interest in the stock to almost like a greater degree than a CEO would do in another place. It's almost like they have to do it. He has to do it because he has to act as a fiduciary responsibility for his shareholders. So all well and good. But yeah, that pretty much covers this stock. Highly speculative, basically gambling to the 10th degree. I'd be interested to know what your thoughts are down below. And if you know anyone who is invested in this company, you can feel free to take this as an opportunity to have a conversation with them. And see, maybe they're newer to the market, so don't be too harsh. But on that note, guys, thank you guys so much for watching. I'll see you guys in the next one.